Hi there, welcome again to my YouTube channel. I am Lunta Di La Paulo, the founder of Yeto Accounting and Tax LLC. If you did not watch my previous video on the 9 key decisions when going into a startup phase or startup mode, I strongly recommend you to look into that video before continuing to watch this video, or if you want to go ahead and finish this video and then go back, I strongly recommend you to go back to watch the video that I talked about these 9 key decisions that you have to consider if you are planning to go into startup or already are in the startup mode. Okay, and today what I want to share with you is about the 9 decision. I want to share with you about the startup deduction that is available to every startup founder. Okay, starting a new business can take some cash, can take some expense, and the government is really generous, as allowed people like you and I to write that off in our tax return or the business return as a startup expense. So here's what I want you to think about first, or at least to know from the definition standpoint. Okay, what is a startup deduction, or what is a startup? According to the IRS, a startup is that phase between you considering to launch a business, to setting up the process, the procedure, to the moment you get that first client. Okay, to the moment you get that first client. Everything before that, everything before you officially launch the business, you put a sign, you hand the business card to tell people, hey, I am officially in business, it's considered the startup phase. And because of that, all the expense you incur in that stage is capped at a certain limit. If you spend more than $55,000 in your startup phase, you have to capitalize the $55,000. Capitalizing means you cannot write it off in the first year you start your business. So for most of my clients, almost every single one of them, they're small businesses. And I believe when they started their business, they didn't even spend more than $5,000, which is great. And it's really that sweet spot that I encourage people to stay in, or to start the business way at the beginning of the year. Okay, and I'm gonna explain why that's important. So here's why it's important. If you spend up to $5,000 in startups expense, right, all of it is allowed to be written off for that year you incur those expenses. The startup expense are written off, and the organizational expense are also written off up to $5,000. Anything above that have to be amortized or broken down, deducted for 180 months. Okay, so that's again why I said either you have to start really early in the year to maximize your deduction, right? So if you wanted to start a new business right now and you spend, and I'm gonna walk us through an example just to illustrate the case. Let me actually go through my spreadsheet. So if you started a business, right, you conducted the analysis, you paid some consultant for the work, you put some advertisement, Google ads or Facebook ads, you are not hiring anyone, you're just a website designer consultant, and you travel to a conference to learn more about the industry, to put the word out there. You spend $400 and you are renting a space, an office space. You spent that much. We're just putting all the hypothetical numbers. You met with your accountant, and you spent a little bit of money. So all these $3,000 you spent here are deductible to you, okay, because it's not above the threshold, and you also spend about 500 in the formation of the business. So all this is deductible to you. But let's say you actually spend about 5,000 here and $3,000 here, right? So 10,000 is clearly above this 5,000 threshold. So the way we break it down, we have the initial $5,000 here that you have to deduct. And then if you started your business, for example, we are in July, right? You only have 5 additional months to claim additional deduction for this year. So your total deduction is gonna be the function of $5,000 plus this remaining balance divided by 180 months, which gives us $5 each additional month. So $29 each additional month. So we multiply 29.5 times 5 months, which gives us $147.7, and we sum this balance to the initial maximum deduction of 5,000. So that's how we calculate our startup expense. So I always advise my clients, if you are planning to start a new business, right, there is a different process of going about it. But if you are purely a new founder, a new startup, try to keep your expense below $5,000, okay? If you are already in the business and you're investigating to buy a business that complements your business or similar to your business, that's a different process, a different tax planning structure, and I'm not gonna cover that here. But I just want you to know that if you want to buy another business, there is also different approach. So another question that I often hear is, okay, so let's say I spent all this money, this 10,000, and after 2 years, which is not going to consume the entire 5,000 remaining, what do I do? Okay, so the answer is simple. You actually can write it off on the last year of operation as a capital loss from the business, right? You write it as an expense in the business and it's gone. But if you fail to start the business, there is a little bit of complication there, right? So let's say you spent all this money to start the business, and then you suddenly got a job offer that is offering you so much money, you decide not to pursue the venture. That becomes a personal expense, which is not deductible, unfortunately. Okay, so going back to what we were talking about, this is important for you as a startup founder. You have to learn these things. You have to understand the implications of making certain decisions, of making certain purchases. And please seek professional help. Seek an accountant, an attorney who understand the subject that can help you. And especially keep good records. The secret in business is maintaining good records. Not only that, organize them in an accounting system that helps you have information that you need to make business decisions. That's why in my firm, I help businesses not only reduce their tax burden, but also provide them accounting and bookkeeping services to help them make better and informed business, investing, and financial decision. So if you believe we can help you, we can connect on a call and hopefully we'll find common ground to work together. I hope this video was helpful to you. If it was as great as I believe it is, give us a thumbs up, share it with your loved ones or other friends who are planning to launch a new business, and I hope to connect with you soon. Have a good evening and see you soon.